Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, pleasure to be back.
John, Serengeti and Sun Metals recently merged to form Northwest Copper. Is it time for Discovery Watch to say goodbye to them?
Absolutely not. The new company is a combination of exploration and advanced projects. Now, Serengeti changed its name to Northwest Copper on March 5th with a 2-for-1 rollback. A few days later, on March 8th, Sun Metals merged into Northwest Copper on a slightly better than 5-for-1 rollback. The next day, they announced a $13 million financing, hard and flow-through shares at 80 cents up to $1.10. No warrants. This just closed today, so now they have just under $20 million working capital, 125 million shares issued, 146 million fully diluted. Serengeti's CEO David Moore has stepped aside as CEO and been replaced by Peter Bell, who's both a geologist and has been a mining analyst, so he understands both sides of the street. Mark O'Day is now the chairman. So this is a completely new company that's focused on British Columbia with copper gold projects, both advanced and exploration stage. So in the next quarter, we hope to hear or see a 43-101 resource estimate for the 421 zone on the Stardust project, which was what Sun Metals was all about. And it's pretty hard to guess from skarn-type intersections what the resource estimate might look out. So everybody will be very curious to see to what extent the existing resource is helped out by this high-grade 421 zone. In Q2, they will also start drilling again on Quanica. And the idea is, because the Stardust and Quanica projects adjoin each other, they're going to go with this idea of a central milling facility that gets fed higher grade ore from the Stardust project with the sort of pretty decent copper gold ore from the Quanica project, which will be both underground and open pit mine. So they're going to do some more drilling to better fine tune the deeper high grade gold components of this system. And they hope to have a updated resource estimate for Quanica out by the end of the year. And in the first half of 2022, they will initiate a preliminary economic assessment, a PEA, for an operation that combines feed from both Stardust and from Quanica. And that, of course, doesn't really interest us Discovery Watchers, because whatever news we get, it just makes only incremental differences. But it will attract an institutional audience to this company because we are in a copper bull cycle linked to the clean energy trend. But what really will keep us Discovery Watchers paying attention is the East Niv project, which is to the north of the Stardust Quanica claim group, and it really came into its own in the third quarter of last year when they showed that here we have, they did all the geophysics, all the soil geochem sampling, and they put together a system that's a copper gold porphyry system that's never been drilled, and it has a substantial footprint. And this target will get drilled in the summer of 2021. And it could end up being a major porphyry copper gold discovery in British Columbia for this year. They'll also go back into the combined Lorraine Topcat project. The Lorraine came originally from the Eastfield group when they were absorbed into Stardust as a result of the Stardust project itself. The Lorraine project was a partnership with Teck, 51% Teck, 49% Sun Metals. Last year, Mark O'Day was able to swing a deal where they acquired Teck's 51% to have 100% ownership of this project. And Topcat is something that Serengeti had managed to option from a group of prospectors who had it in different companies in prior years. So this is now a combined project, but most of the work this summer is going to be target development work. I don't know if they'll get it to the drill stage, but this is a company that's not going to be a one season show. The two advanced projects, Stardust and Quanica, they have the potential to become a future mine, so that's all feasibility demonstration work. East Nev is a potentially exciting new discovery this year, and the Lorraine Top Cat could end up becoming a discovery star in 2022 when they put everything together and come up with a new exploration strategy to try and find the big zone that always eluded Teck and the previous operators on that project. So definitely we are keeping Northwest Copper as a Discovery Watch company to pay attention to.
We'll have more with John Kaiser right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, Robert Friedland's clean tech is up 1,000%. What happened there?
Well, it wasn't as a result of something phenomenal in the revaluation of the company. What they did was on Monday, March 29th, they did a 10-for-1 rollback, and that's not unheard of, but quite unusual on the Australian Stock Exchange, where companies trade with billions of shares issued. Post-rollback, they have about 88 million issued and 91 million fully diluted. They raised 35 million Australian at 25 cents pre-rollback price in January. About 13 million of that came from existing shareholders. They call it a share purchase plan rather than a rights offering. And the rest of the $35 million came from Robert Friedland himself and Scandium International, the Chinese company that's the second largest shareholder in the company. So right now it's trading on some sort of strange deferred settlement basis. That's supposed to end on April 9th. And then on April 12th, they expect the name change to take place where it will cease to be Cleantech. It will become Sunrise Energy Metals Limited with symbol SRL to reflect their flagship project. Why they did the rollback, I'm not sure. In Australia, people do not have problems with penny stocks and billions of shares out. They did delist from the TSX where it traded in Canadian dollars. They did so for two reasons. One was that the settlement overlap was going to be a nightmare, so they said, well, let's just get rid of it. And the other reason was that there really wasn't much trading on the Canadian Stock Exchange. I wouldn't be surprised if somewhere down the road they apply for a listing on the Amex division of the New York Stock Exchange. The stock price is trading close to $3 Australian. That probably clears the $2 minimum U.S. price required for a listing, and that would make them available to all the Robin Hooders who can only trade NASDAQ and New York Stock Exchange listed stocks. And they, of course, are in the whole clean energy space, which is quite popular with that group. They plan to spin out their water division, which is what the company had before Robert Friedland got involved in late 2014. And it's going to be all about the what they call the Sunrise Battery Material Complex. It's in New South Wales. It's a nickel cobalt laterite system, a fairly low grade. They did a feasibility study a few years ago, and they've had cost escalation, and it's not quite clear what metal price is required. But they've concluded that this thing has to be a battery grade material supplier of nickel and cobalt, not generic nickel and cobalt that gets sold into the LME at whatever the LME price is. And right now they're looking at going downstream, adding a recycling component to the operation. And they're also thinking about not just making nickel sulfate and copper sulfate, cobalt sulfate, but also cathode precursor materials, so that they become a somewhat downstream supplier of materials that go into the batteries, the lithium-ion batteries. But there may be a problem with that because they only have a development consent right now from years ago that the previous operator contained. They've changed the mining plan significantly, so they're applying for a modification. They do not yet have a mining lease, and they also need to negotiate with various landholders because they need to build a water pipeline from 60, 70 kilometers away where they secured the water rights. This is an area that's good for farming, agriculture, but it's also a water-challenged area. There are no nearby rivers that water can be drawn from. It all comes from the aquifers. So it may be a while before this Sunrise project ends up being in production. I would suspect probably a minimum of 5 years. And then that raises the question, if everything is designed for a cathode in the battery that has nickel and cobalt in it, do we know that in 5 to 10 years, the winner in the current technology arms race for the lithium-ion battery, will the configuration that emerges as the one that's in every electric vehicle have nickel and copper in the cathode? That is cobalt in the cathode. That is not so obvious. That's why I like the car project of FPX Nickel considerably better. They will be producing a nickel concentrate, ferronickel, 65% nickel, which will be a direct feed for stainless steel mills. Stainless steel demand is never going to go away. It's only going to get greater. So that project, when it's developed, will always have a market for its nickel output. But they are also right now researching the possibility of making nickel sulfate from the ferronickel concentrate. And obviously anything is possible, but what is the cost of doing so, and the price that you're likely to get for this? Are you going to get a sufficient premium so that you make a profit doing so? But they're doing the R&D for this, and this is a large 120,000 ton per day planned operation. There is also cobalt in there, but in the ferronickel concentrate that goes into stainless steel, you don't get any credit for the cobalt. It just disappears. So they haven't even reported a grade. However, if they were to be successful and could make nickel sulfate commercially, this involves dissolving the ferronickel concentrate, removing all the iron first, then selectively extracting the nickel sulfate as a 4N, 5N purity material. And, of course, the cobalt will also end up in solution, so they would be able to extract cobalt sulfate. So the beauty of FPX Nickel's project is that if in 5 to 8 years, when this thing ends up being permitted and built, if the nickel cobalt is no longer part of the lithium-ion battery, it doesn't matter because the economics will have been based on nickel as a feedstock for making stainless steel mills. Now, if stainless steel metal. Now, if this kind of bad development happens where Sunrise, nobody really needs nickel sulfate or cobalt sulfate from Sunrise anymore, the Sunrise project in essence becomes worthless. However, it also hosts the world's richest scandium deposit, and it's on the periphery of the nickel cobalt resource. So the company could still revive that as an asset. Right now, it only plans to produce it as a byproduct, be about 75 tons of scandium oxide per year as a byproduct from the nickel and cobalt recovery if that project gets developed. But if the company really wanted to hedge itself against a negative outcome on the nickel cobalt usage for lithium ion batteries, it will be paying close attention to Scandium International right now. Now, this company is an ailing company. It filed its 10K annual reports on March 1st with the SEC. It waited until March 25 to file the same documents on CEDAR, the Canadian regulator, because the deadline was only March 31st, not March 1st. In past years, they have filed the documents on the both regulatory bodies pretty much the same time. Why the difference this year? Well, when you look at it, you can see they have a working capital deficit of $1 million US, and the capitalized assets are less than $1 million. The burn rate is about 100,000 Canadian a month, and the company is now no longer meets the continued listing requirements of the TSX. So this company, which has somehow been unable to raise any money during the last sort of 12 months of bullishness for the resource sector, and even in the last 3-4 months where there was great interest in critical metals and clean energy type metals, they are in danger of a delisting review by the TSX. Now, this could be both good and bad news. The bad news is that since May, when they announced that they have this plan to recover critical metals from the raffinate of copper oxide operations, since May, they've supposedly been negotiating with these various mines in the United States. There's a dozen or so of them there, for a hosting deal where they can split the revenues and costs for recovering this stuff and bringing their patent-pending technology to bear to recover critical metals that are actually going to waste right now, because the copper producers only recover the copper from the pregnant solution, and the rest of it just gets pumped back onto the pile. And when the whole heap leach cycle is finally done, whatever was in there simply precipitates back into the pile. And these leaching operations dissolve a whole bag of important obscure metals that go into the battery sector, that go into other critical applications. There's about 35 of them that the United States has listed as being critical, and you would think that they would have something happening by now. It's been like almost a year that they've been negotiating, but still not a peep from the company. They haven't updated the website besides posting news releases. The corporate presentation is still from March of 2020. Doesn't mention the shift to critical metals recovery. Still talks about trying to develop the offtake market for scandium for the Ningen deposit, which has a mining lease, which is in New South Wales. And so the question is, are they doing this, running it right down to the wire because they are very close to having a deal, and they really don't want it messed up by having the TSX announce its delisting review right when they're trying to be a serious company? Or have they basically got nothing? And the reason they don't update the website or return shareholder calls or communicate in any way is because this company has become semi-dormant, still burns $100,000 a month in people overhead. And this is why a company like Cleantech, soon to be renamed Sunrise Energy Metals, might be looking very hard at this, because they only talk about scandium in terms of, we continue to do R&D on developing offtake markets, and that chicken and the egg problem is a huge one. But last May, Rio Tinto announced its Sorel Tracy breakthrough, where it is able to recover scandium while upgrading its titanium slag to the new 95% titanium dioxide that the pigment makers want. Rio Tinto is cracking the chicken and egg problem. It will be able to produce scandium incrementally. It has its in-house aluminum division, which it can use as a marketing arm. And their limit is 50 tons per year. And when they get that to that level, which could be 3 to 5 years from now, but they'll know they're getting there a lot sooner, that's when they hit the wall. And that's where having something like the primary scandium mine would be the way to go. And from Friedland's perspective, he can't really do anything with its scandium-only project right now because the big story is the $1 billion plus nickel cobalt facility. But if he can now see that the offtake market development is being done incrementally by Rio Tinto, why not take out Scandium International and just sit on it? Maybe if they can recruit Willem divesting skills in the critical metals recovery, maybe Freeport would listen to Robert Friedland much more readily than they appear to be willing to listen to the management of Scandium International. So this company, this crisis, that financial crisis that it can't seem to be able to solve, and its inability to communicate with shareholders, it might end up just plain disappearing over the next while because the revamped Sunrise Energy Metals might see the wisdom of grabbing this Ningen asset now, which it could start working on to develop in parallel to its Sunrise operation, which down the road, when we're at 1,000 tons per year demand for scandium oxide, well, then they might be able to develop the scandium-only portion of that operation. So cleantech hasn't gone up 1,000%. That's only because of the rollback. But the company has a valuation of less than 300 million Australian, and it's got lots of things going on. So it's a company to keep an eye on, especially if it ends up getting a listing in the United States.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Adamira Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Adamira's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at adamiraresources.com.
Welcome back. We're speaking with John Kaiser. John, what does Adamira Minerals have planned for this year?
Well, Jim, I last talked about Adamira in February of last year, and they had just done a very significant deal with Hochschild, the Peruvian miner, and this is on the Cook Mountain project in northeastern Washington, on which they've been working since 2013. And this deal allows Hochschild to earn 60% by spending $8 million US over 5 years. And once they've done that, they have the option to go to 75% by funding a feasibility study within 3 years. And that 3-year timeline is important because sometimes these feasibility studies can stretch on forever and ever, and the company with its ultimate minority net interest is dead in the water. So when Hochschild came in there, they brought a new set of eyes to the project. And last year, no drilling got done. Part of the reason was, of course, COVID and all the restrictions on getting anything done, even getting drill permits and so on. But the company used this period to do a rethink of its exploration strategy. And what we're now seeing is the third wave of exploration strategy for the Cook Mountain projects. And these are skarn-type gold deposits that have been mined in the past. And this area in the Republic Graben area, these were ones that Echo Bay had at one time. developed and mined. About 70 kilometers to the west is another graben, and this is the one which hosts the Buckhorn mine that Crown Resources Corp had discovered in the late 80s, and which was eventually developed as an underground mine. Kinross ended up as the operator, and when Adamira gave up on uranium and diamond exploration in the Canadian Arctic in 2013 by merging the companies, Mark Kalibaba went into Northeast Washington to look at the gold potential. And in the first wave, they assembled various projects, tried to drill for extensions of existing systems, didn't have a huge amount of luck. And that period was 2013 to 16. Then they went and did a major mag EM geophysical survey. Their thinking was, well, these skarn deposits are associated with limestone, and they consist in sulfides in the proximity of magnetite. So we should be able to see targets emerge that are have a magnetic anomaly and also a conductor associated with them. And the area had never been flown, so they did that flying in 2017, generated lots of targets. We were, of course, in the midst of the bear market, so they had to do 5-cent, 3-cent financing, so they underwent a fair amount of dilution. They had exciting targets such as the Big Banana, but when they drilled these targets, and it took them a while to drill all of them because the U.S. Forest Service was really dragging its heels in that area in terms of permitting some of these targets. But it turned out that the Big Banana itself was a combination of magnetite and graphite and pyrrhotite, which did not have any gold in it, but is also very conductive. And as a result of this second wave of exploration, they began to rethink really what are the targets that we are chasing here. And when they did the deeper dive into this, they realized that the magnetite in the limestone is something of a red herring. The gold mineralization tends to be in the adjoining formation of more of a clastic sediment, and that's where the gold ended up as the fluid flow ended up being soaked up. And they had used some IP surveys, shallow only to about 17 meters, on targets like Oversight, and they realized, well, these IP surveys are revealing the disseminated sulfides that are associated with the mineralization. This could be an important tool. And when Hochschild came on board early last year, they said, definitely, we're going to do deeper penetrating IP surveys over all these target areas. We've done the soil sampling that has revealed the areas that have elevated gold anomalies. And so that's the big thing that they did last year, was these IP surveys to a depth of 140 to 150 meters. And they will be mobilizing later in mid-April, with drilling expected to be underway by May, to drill IP targets on the Goodfoot project, the South or Lanefoot South project, and ultimately returning to the Oversight project. It's a 3,000-meter drill program consisting of 300-meter holes angled 50 to 50 degrees, all basically designed to test these targets. Because what emerged is that the anomalies, the chargeability highs that had shown up with the 17-meter depth surveys that Adamira had done in the prior years, they blossomed at the 140 to 150 meter depth. So their thinking is that, we've got gold at the surface in the soil geochem. We know the gold is associated with the sulfides. We see the sulfide distribution blossoming at depth. We could end up having significant targets. So that was a major development last year, was this Hochschild deal, this doing the IP surveys and confirming that the targets actually look better at depth, and setting the stage for a $1 million drill program this year funded by Hochschild. The second important thing that's going to become a good Discovery Watch story for us is that last year, Adamira went to the Buckhorn mine area and staked a large land package around the original claims, which Kinross still owns, which holds the depleted mine workings and the infrastructure associated with that. There were some inlier claims that they had to deal with prospectors on, but they now own 100% of this area. And this is very interesting because in the waning years of the Buckhorn mine, Kinross decided we're going to do a drilling blitzkrieg of the surrounding area. They've done a lot of target developing work with soil sampling, geophysical surveys, and they went for this astonishingly large permitting plan of operations. They wanted to have the right to build 120 kilometers of road access, 675 drill sites to support 950 drill holes, all in this surrounding area, this area surrounding the Buckhorn mine, which was 1.3 million ounces of 12 gram per ton, a hugely profitable underground mine for Kinross. But the problem is the area sat within the Okanagan-Wenatchee district of the U.S. Forest Service. And this district is really, really focused on supporting recreational activities and stonewalling any type of commercial activity. And so as soon as they proposed this monster permitting application, it was dead on arrival. And so Kinross, when the ore ran out, basically shut everything down, pulled out these claims lapsed, and they've been sitting there open for a while, and for quite a while until Adamira came in and restaked it. And so you think, okay, well, you're still going to be dealing with the Okanagan-Wenatchee U.S. Forest Service district, which doesn't really want to approve anything to do with exploration and minerals. But then last year, as a result of lobbying by various commercial interest groups in that area, they were able to get the jurisdiction shifted over to the Colville district of the U.S. Forest Service, within which the Cook Mountain project that Hochschild is permitted to drill this year sits. And Adamira had its problems with this particular district too, getting permits, but they've since come around to being much more supportive if things are done correctly. So it's not like that division of the U.S. Forest Service is lax and lets bad practices, companies get away with bad practices. No, they're just simply applying the rules as they are meant to apply, not stonewalling it because they have a philosophical objection to any sort of mineral development and exploration in that particular area. So this was a surprise for Adamira, which it wasn't really counting on. It was expecting the hard permitting slog. Right now, they are negotiating with Kinross to acquire the trove of data that Kinross had generated to support its monster permitting application. And if they can swing a deal, Mark Kalibaba has told me, well, this would save us 2 years of duplicating all that work that Kinross had done. So we could be in a position next year to mount a major drill program to look for additional crown jewel type deposits, high grade gold systems, and revive this area of northeastern Washington. And this second important development for Adamira is responsible for the third important development, which is that the people associated with the original discovery, Crown Resources Group, they've all sniffed this out, and they are flocking to Adamira. First, Mark Jones, the CEO of Crown Resources, joined the board in the middle of last year. And then only last week, Chris Harold, who was part of Crown and ended up in charge of Solitario, which had been spun out to explore in South America, he joined the board. And then various people who had worked for Kinross on the Buckhorn project, people like Peter Cooper, they approached the company and ended up joining the advisory board. So all these people, once associated with the Buckhorn play and the surrounding exploration, they're all flocking to this company. And with it has come a different type of audience. The second wave that was financed at 3-5 cents full warrants, that was funded by Canadian clip and flip typers, which as soon as it was free trading, they would blow out the stock and clip the warrant. They just completed a financing of 15.9 million units with a half warrant at 15 cents for 2 years at 10 cents, even though the stock this year, I think, has only once traded above 10 cents. And it only went to about 30, 33, 35 placees, and apparently many of them were American investors who are not here for the 4-month clip and flip because they don't like the high tax rate that applies to short-term capital gains. They like to hold stocks for 12 months or more so that long-term capital gains apply. So this is a very solid financing, about $1.6 million raised with the existing money in the treasury that boosts their working capital at $2.4 million. And there's a bunch of 5-cent warrants that expire in the next month, which could add another $500,000 or so. So I think for the first time since it pivoted from uranium and diamonds into gold exploration in northeastern Washington, Adamira, despite having 245 million shares fully diluted, is in the best shape it has ever been to deliver a discovery from the Cook Mountain project. And if there's anything there, Hochschild will keep funding it to $8 million US. And then what they call Buckhorn 2.0, it's picking up what was a very successful discovery and mine, and looking in the surrounding area, it's part of this Tovorodo Graben area on the western margin of it, and it's very unlikely that the 1.3 million ounce deposit was the only gold system that formed in this area. So Adamira is alive and well, and I think we're going to have an exciting year as this drill program unfolds. They think they'll be able to drill 1 hole a week. They've made arrangements that make them think they can assay turnaround in 4 weeks rather than the 6 to 8 weeks that has become normal these days in exploration. And so we should know this program should be done by mid-July, and we should know if they have a discovery there that requires stepped-up delineation drilling. And failing that, they'll go into the Buckhorn 2.0, where they already have one target, Keystone. If they can get the permitting taken care of for that, they'll be able to drill that gold target as something that was clearly left over from the Kinross days. As for the bigger potential, that will likely come in 2022, especially if they can get the data package from Kinross.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.